So good morning there. How you doing? Hey, what I'm going to do in this video is talk about and show you how to set up what are called accounting overhead rules. Accounting overhead rules in this scenario are used to create overheads when you're only buying purchase parts in an average cost scenario. So the items are going to be average cost. I don't have work definitions. I'm buying finished goods that I'm turning around and selling. And I want to add an overhead to that to account for what's going on inside the facility. So, a couple of setup steps first to do here. So, I'm in my super user, but the first thing we're going to do is go into setup and maintenance and create what's called an expense pool. A lot of this has already been kind of set up, so I'll walk through how to do it. So, we want, whoops, get my finger in the right spot, expense pool, and manage overhead expense pools. You can see we have quite a few already set up in here. We come down here into the US. The one I'm going to use is this one. Um, Setting these up is fairly easy. Hit a plus sign and it opens up a line somewhere and you give it a name and a description. Description can be ANT overhead, asset, enterprise set. So of course, enterprise sets or the set names will be based on your setup, and then you can save that. Whoops, save and close up here. Oh, I didn't capitalize it. Okay, enter here, see, search. Okay, so we can get this set up, and we'll save and close it. That's all there is to setting up an overhead expense pool. Overhead expense pools are required in some areas in cost accounting. There's really no further um, processing on overhead expense pools. I think those are going to be future use. The intent is to be able to select a group of account numbers from the general ledger. That would be your actuals. You compare it to the earned. That happens in cost accounting, and voila, you have variances. So, having said that, the next thing we need to have is a cost element to place this in. So we're going to come over to cost elements, and I'm going to work with two here: manage overhead cost element groups and manage cost elements. So the first thing is the cost element. These are your stratifications of labor, material, and overhead. So have a couple of them set up here already. You can see the material, overhead, etc. So I have created this product overhead um, item or cost element. I'm sorry. Again, to create those, we hit the plus sign. We get action overhead. Yeah, it's an overhead um, material overhead, etc. So you can set these up and save them. And then these are going to be the stratifications of labor, or not labor, it's called resources in Oracle. So resources, overheads, and material, you can split those out in an infinite number of ways, however many ways you want to set them up here. So the next thing I need is a group. So these are the groups that we have here in the system. I have this US material group. What this is, this creates the base over which your overhead is going to be calculated. I'm going to do a percent value. So I have to create a cost element group. Right here, we have this cost element group, and it's going to be based down here on material and taxes. So the overhead that I'm going to enter in the next screen, called Manage Accounting Overhead Rules, is going to be based on just material and taxes. You can certainly add others here if you wish. Click the plus sign. Um, you can call this overhead, and so you can go out and add other elements to your base. It's just however you want to set it up and whatever you're trying to accomplish. You also see here there's one for transactions. This is for a different type of group that we might create, but we're going to be using this U.S. material group, and it's just going to be based on material and taxes. So this could be VAT taxes or sales tax in the United States. It really doesn't matter. So we'll save and close this. So those are the three setup steps before we actually go into cost accounting and and set up the overhead accounting rules. So now I'm in cost accounting. I'm in our system here. It's cost accounting manager, and right here is the manage overhead accounting overhead rules. So manage accounting overhead rules, and I'm going to sort on this. The only required field is your cost org, but I have some rules set up, and I'm going to search on those. So it's going to be starts with. So these are some overhead rules I set up as I was working through and testing for this presentation. The one I'm going to work with here is material overhead. And so I'm going to go ahead and walk through how this gets set up so you can see the different fields and the different options, and we can talk about those. So I'm going to do material overhead 2 just because, and it's in my U.S. operations. It goes into financial, which is my book that posts to the general ledger. I'm not worried about periodic average costs here. So this is just average, weighted average. My expense pool is material overhead. Because you have, I can't type, guys, sorry. Overhead. I'm sure I put it. And then this is the cost element that we're going to set up. This we just set up a moment or two ago in the cost element, overhead. And again, this can be any cost element that's out there, right? And then what transactions or what groups of transactions am I wanting to apply overhead to? And so in this case, since this is for purchase orders, I'm going to do purchase order transactions. But as you can see, I can put overheads on sales order, issues, returns, inventory, et cetera, et cetera. Even inter-org transfers, transfer pricing, I can put overheads on those. But this is going to be purchase orders. And then if I go one step below purchase order, okay, in this purchase order transaction group, which transaction do I want to create overhead on? And I'm just going to do purchase receipts. So anytime I get a receipt for this category of items or a specific item, it's going to calculate this overhead. The next one is inventory org. Now, if you leave this blank, it'll apply this overhead across all orgs within your organization. I'm going to narrow this down a bit to just my Atlanta org. If you know this demo database, that's 002, right? And then category. I can create an overhead for a category of items. So I can narrow it down a little bit. So if I leave inventory org, category name, and item blank, then it will be global. This overhead will apply to everything. But I'm going to narrow it down a bit because I don't want to mess up everything else that's in here. I'm not going to worry about categories, which you certainly can use. I'm actually going to come over here and put in an item. So I just want this on a specific item. So I'm just going to put it on 1111. I'm going to have a cost basis. Now the cost basis. What am I going to do with that base that I set up? And you'll see based on here. So by lot. So I can do an overhead based on lots. So it's just going to take that lot number. Per transaction. If I put per transaction and then down here in the rules, in the rate, I put some rate. That rate's going to be spread across only the items in that transaction. And since I requested an item number here, if that item isn't in that transaction, nothing will happen. Percent value is what we will use, or units. So this can be a rate per unit. So if I do, every time I get this EE4751111, I can put $10, let's say, and every time that comes in, I'm going to add $10 to the overhead. So there's different ways that you can do this. We're going to do a percent value. Now the percent value, again, if I select this, it's the only one that's going to ask for the base. What am I going to calculate my percentage on? Well, that's the base that we set up in the cost element group, that material and taxes. So we're going to do a percent value. It's going to be on this U.S. material group. And you can set up different groups over there in update cost element groups. So depending on what you're trying to accomplish, right? And then what do I want to do with this number that I'm creating? Well, I want to include it in inventory. So it's going to be absorbed, it's going to be capitalized, it's going to be part of my inventory valuation. So that's how this gets set up. And then here at the bottom, I have to create the rate. And you'll notice the rates, there's a start date and an end date. So I can change these rates through time. It won't go back and change what's already been posted, but it'll calculate anything new based on the new rate. So we're going to put in 10%. So it's just 10% of material and overhead is going to become part of this product overhead cost element every time a purchase receipt happens. So that's how we set this up. If I were to say this is a per unit, that wouldn't be needed. And then this becomes $10 per unit. So this might be a good thing to use if you have a customs that or duty rate that needs to be applied globally. This might be a quick way to do that if you're not running landed cost, as an example. So different things you can do here. I'm not going to save any of this because I already have the line here that I want to be using. And so I'm just going to cancel out of this. And so what happens at this point is after we do a purchase receipt, the background processes run, the transfer transactions from inventory to costing and receiving the costing and create cost accounting distributions. It will update my average cost for that unit. So to go look at that, we're going to go to review item costs. Just take a moment to come up. More than a moment to come up, I guess. These are the things in demos that drive you nuts, right? You go in here and you push a button, and then you got to think about how to dance and sing. So we're going to look up EE4751115, I believe is the item we were playing with. We're going to do a search on that. And then I'm going to click on it here. You can see I worked with this last week. We're going to do review item cost. And we have overheads now. And we have all our material numbers. Now, this also has some landed cost numbers in it, which is fine. I wanted to do detached so you could see it all. So what happens when this runs with that new overhead rate is that based on this number, it's going to calculate this overhead. And of course, you're going to say, but that's not 10%. You're absolutely right, because we're in an average cost world. So if my overhead on my existing inventory was 0, and then the new transaction comes in and it adds overhead, then it's going to take that 10% and apply it across all the quantity, because that's how weighted average works. And that's where we come up with this number. So every time a receipt comes in, this overhead rate will be updated. And so until the next receipt comes in, and we're going to go out here and look at this over a month, we can see that, there have been several purchase orders here. This acquisition cost adjustment just means something happened, and I think that was landed cost, and it will go and update that information and do all the weighted average calculation. So again, setting up material overhead in a weighted average situation where I'm buying finished goods to resell. I don't manufacture anything here, so the only way to get overheads is to use accounting overhead rules. Otherwise, I can't get overhead on my item cost. Hope this was helpful. Have a great day. Oh, by the way, down in the link below, you'll see a link to a couple other videos I did on other types of overheads, as well as how to get the PowerPoint and the walkthrough of this. Thank you very much.